report series we're launching today is a multi-month undertaking. And let me just share with you a little bit about it. So in line with our multidisciplinary approach, the report series that we have developed has been a multi-month effort where it's been our engineers, finance experts, economists, law and policy experts, all working collectively for some months to reverse engineer the digital yuan system and really understand its implications for the global financial system. And this study, as you can see, is a multi-part one, and it looks at financial and non-financial implications, as well as global and domestic implications. And let me just give you a quick overview to some of these reports. The first report here is an overview. The second report is the reverse engineering, where we have really pieced together from a variety of technical data what the reference architecture of the digital yuan system is. How does it work? What are the different levels of users and functional flows between them? What is the programmability in the system? What is the token structure of a DCEP? And all these aspects. And what we saw was that the design of the system was so path-breaking that the financial sector implications were much bigger than people were even anticipating. So the next report, the third one in the series, deep dives into all the implications of the DCEP design for the global financial system. And it also goes into detail on an aspect that many overlook, which is the transformation of the Chinese financial system. And there are implications for this design for cross-border payments, for the internationalization of the renminbi, for the reserve status of the currency, and all of this is examined in this report. And while the currency architecture is already path-breaking, what became very evident to us very quickly is that the DCEP is accompanied by a much larger strategy around blockchain, around data and information flow in the Chinese economy. And the next report in the series looks at this wider Chinese strategy. And it is really that, coupled with the digital currency, which is what makes for this very formidable transformation that is on the way in the Chinese economy. So in the brief time that we have today, I would like you to be aware of three dimensions of transformation that the DCEP brings. And before I do that, I just also want to illustrate to you that this is a very different CBDC system than many experiments we see around the world. The PBOC has taken major dilemmas in the issuance of CBDCs and turned them around using innovative solutions. So let me illustrate to you some of these aspects. So a first such dilemma is a buzzword many of you would have heard about, and that is the risk of disintermediation. So as an oversimplified explanation, this is a case of banks and other financial players becoming redundant, or their business models being severely impacted because the government starts issuing digital money directly to citizens. You know, they can offer interest rates. You might not need bank accounts anymore. And you can check out our blogs for more on this. But what's important to know is that this is one of the most major dilemmas that central banks all over the world are grappling with when they think about building CBDCs. So China is one of the first hybrid CBDC models in the world. And that means that it's both a wholesale and a retail CBDC. You can read more about this in our blogs. And they have built this highly innovative method of creating retail currency without disintermediating the banking system. And technically, this is enabled by two processes in their issuance and reserve management system. So I want you to just take a look at this picture. This isn't the reference architecture, but just to give you an idea of the industry players. And I just want you to take a look at this and assess, does this really look like they're putting people out of business? And it doesn't, right? It really looks more like the opposite. And that is the most important thing to understand about the Chinese experiment, is that they have created roles in the system for almost every existing financial sector player, and a couple of new ones, as you see. And like I said, that has taken significant innovation in the token issuance process. So that is one illustration of the innovative approach that the Chinese government took. A second illustration is around another risk with CBDCs, which is the risk of creating a digital divide. And CBDCs could, in some cases, increase the gap between haves and have-nots, simply because they're only accessible to those who have access to the internet and smartphones. And those who have this access will end up having even more access, and those who don't will be left behind even further. And this is where the DCEP has really pioneered a very novel innovation, one of the most novel innovations in payments till date. And before I do that, I just want to lay out how they have set up two types of wallets. One of these is the online digital wallet, and the second is the offline hardware wallet or chip card-based wallet. This is also akin to cryptocurrencies, and if you read an op-ed I wrote for Coindesk, I have outlined how the Chinese CBDC design really blurs the lines between cryptocurrency design and CBDC design. So they have created an online and offline wallet, and what they've really created are these different kinds of offline transactions. So the online transaction is straightforward. Offline transactions, typically, there are offline online transactions where at least one device is online, and it can communicate with the servers, it can communicate with the banking system, it can settle a transaction in the back end, right? But what is very, very novel is that they have built this double offline payment system. And this is something unheard of, that you can not just transfer, but you can also close settlement for legal money without the internet, without connecting to a bank or any other system. And this is a very unique functionality that is NFC technology enabled. And that's something that we've explored in our research. And I highlight this because this is a very important development. It really changes the game with respect to digital financial inclusion. And when you can bring the bottom of the pyramid into the digital financial system and enable business models for that bottom of the pyramid, that will be transformational for billions of people. So there are so many such aspects that are too detailed to share here, but I will share with you some implications that I believe everyone really needs to understand. And the first such dimension of transformation that the DCEP brings is the DCEP is going to change the nature of money. And just like cryptocurrencies did for money in general, the DCEP will change the nature of sovereign money. Why do I say that? Because firstly, the DCEP is much more than just a digital version of money. Unlike many CBDC experiments till date, the DCEP is highly programmable. And the idea of programmable money is that it's money wrapped in code that can provide all sorts of functionalities. So for example, if you want to automate tax payments for your business, just program it into your money. You don't need to go through a very complex reconciliation and audit process at the end of the year. You can program it into the money that you use for these business payments. For example, you need to lend to someone with a due date. You can just program this into the money instead of going through an escrow service. And this is just one dimension of functionality which will fundamentally impact intermediaries and business processes and systems that we just take for granted today. And those of us familiar with the cryptocurrency ecosystem have seen this for over 5 years since the dawn of smart contracts. But what is interesting about the Chinese experiment is how early a lot of this was done. And those of us who have been following CBDC discussions, we see programmability just becoming a topic right now. But the Chinese began looking into their CBDC all the way in 2014. So the DCEP has functionalities that never existed with digital money, like programmability, offline payments, and eventually what that will do, and why I say it will change money, is that it will change the relationship that people have with money. You know, it's going to change businesses. It's going to change the expectation from governments. If you have, for example, instant tax and compliance everywhere, and the other countries are going to see this and want this, and it's going to become a demand from the people in terms of what they expect out of money. And this is essentially just an innovation in China, but I think it will have spillovers for all parts of the world in terms of what people expect from sovereign money. The second dimension in which our analysis shows that the DCEP will be very transformational is, of course, in the area of geopolitics and the global financial system. So the DCEP will change this dimension significantly, and it will do it in different ways. One of the most obvious ways that's discussed quite often is that it will impact the dollar-based cross-border payment systems. And cross-border payments is a fairly complex system, and for this piece, I really encourage you to understand it from our reports, because it touches upon everything from clearing and settlement to cross-border rails to FX, remittance, trade finance. But in a very, very brief way, with the DCEP and other platforms, there is now new infrastructure that bypasses a lot of legacy infrastructure, and this new infrastructure cannot be sanctioned easily. It's very fast. It doesn't need as many intermediaries or as many hops. And this isn't just one infrastructure, but many. And the implications of that are very significant for the current dollar-based infrastructure around cross-border. And that, of course, has implications when we think about the dollar and the global financial system. And as far as the internationalization of the renminbi goes, there isn't just now technical infrastructure for this with the DCEP, but there is also, for those of you familiar, a lot of legacy infrastructure in foreign affairs and trade, which will assist with this internationalization. So the Belt and Road is talked about often in this regard. And what we've explored in the reports is, you know, the digital Silk Road strategy of the Chinese government and how all the elements of that playbook are in place when we think about the DCEP and we think about blockchain. And this is a relatively better known playbook. What we also saw recently is the RCEP getting signed. But let's say that even if they do not rely on trade flows immediately, right? Even if they just rely on their own diaspora and their focus on the Winter Olympics of 2022, which they have confirmed is the date for the full rollout of the currency, even just integrating the DCEP into those sort of cross-border flows will do a lot for its adoption and internationalization. And so China is already the largest trading player in the world, and about 20% of global trade goes through China. So moving the DCEP into trade, moving it into these cross-border peer-to-peer payments, that already does a significant amount for the internationalization of the renminbi. Lastly, on the aspect of geopolitics, the question that comes up often is on the reserve currency debate. And I think apart from cross-border and internationalization, there are many dimensions of reserve currency which have to do with monetary management in your economy, which have to do with your financial system. And this aspect, many people overlook that the DCEP is going to be very transformational for the Chinese economy. And one aspect of that is the financial system, but another big aspect and a third dimension of transformation of the DCEP is what I want to highlight to you now. And this third dimension in which the DCEP will change a lot of things is the DCEP will change the digital economy. And it will change what we consider as innovation. So if we take a step back here from China and think about CBDCs in general, and some people will argue that CBDCs are just a tool to create a full surveillance state, right? And I also want you to look at a flip side to that argument, which is that CBDCs can actually be enablers for moving you into a completely new reality as a society. So what do I mean by that? Because this is exactly the sort of direction that China appears to be consciously building. So the DCEP is not developed in isolation, right? And as I described to you when I was introducing the reports, there is an even larger strategy around blockchain and data. And that is developing at a very rapid pace within China. So there's a much larger play at work than just the currency, and that's the play around data. And what China appears to be setting up is that it's preparing to gradually move away from the siloed internet-based data structure into an interoperable data layer, which is what blockchain enables. And as I said, it was interesting that they started very early and they incorporated so many features of programmability. On blockchain, they also started very early. And what is surprising is that from the start, they have focused on blockchain 3.0, which is the interoperable production grade blockchains. And that has been the national focus. And some of you have heard of the BSN, but it's not just that. There are a staggeringly large number of projects that are being built, and many of them are reaching production stage. And I'm sure some of our panelists will touch upon this. So these are some dimensions of the many that are analyzed in our report series. I'll let you know at the end how to get them. What I'd like to reiterate is that the DCEP really is a game changer, and not just because it's a CBDC, but because of the kind of CBDC it is and just how multi-dimensional its strategy is. So it's not just a technical shift in making money digital, but it's going to transform the way the Chinese economy functions.